What's up guys, it's your guy Shivo yet in another class, the 6th lesson of the basic plus intermediate level of the cautious artistic trader strategy with the cut strategy. Okay, so today in this lesson we're going to talk about Fibonacci trading tool. Okay, Fibonacci is basically a drawing tool, okay, like just the trend line, the rectangles, the triangle, the oval, things like that. Okay, yeah, so Fibonacci is also a tool, but it's so meaningful that we have to look at it at its own. Okay, so Fibonacci, we use it to estimate our entries using Fibonacci retracement and to estimate our take profit using Fibonacci extension. So there are some levels that we have to mark. Okay, so let's go to illustration. So we always know that price can be always in an uptrend, downtrend, or in a consolidation. So we want to be using the Fibonacci when the market is trending. So that's when the market is in an uptrend or in a downtrend. Okay, so the first illustration that I'm going to show you is when the market is in an uptrend. So you get that the move is from A to B to C, then it goes onwards to up. So we get that from A to B is the impulsive wave, and then from B to C is the corrective wave, and then from C is where we have the continuation of the trend. So that's an uptrend. Okay, yeah, so when you take our Fibonacci, you'll be pointing it at from point A to point B, so that we can estimate our retracement or the pullback to point C and see that it is up to 50th level. Okay, so the retracement is from 50% retracement to 61% or 78%. So let's see. Yeah, so there is a chart there. You can see Fibonacci retracement is it is at 50% or 61% retracement. Okay, yeah, so when you take your Fibonacci tool and you want to measure Fibonacci retracement, which is 50% or 61.8% or 78%, you take your Fibonacci tool and point it at A and drag it to B, and then you estimate the retracement C. Okay, let's look at another example over here. So when you take your Fibonacci, you click on A, drag to B, and C, you can see that C is at 0.50%. Yeah, so Fibonacci retracement and projection level. So we have a downtrend now. So for a downtrend from A to B, again is the impulsive wave, and then from B to C is the corrective wave. So with Fibonacci retracement, we'll be measuring the corrective wave so that we can estimate our entry at the 50th percent or the 61.8% or 78%, which is the retracement level that we want to be taking our entry from, targeting downwards. Okay, so Fibonacci retracement and projection. Okay, so as always in a downtrend, we take our Fibonacci tool and click on A and drag to B, so that's the impulsive move down, and then we measure the corrective move or the corrective wave C, and that's where we take our entry and we continue down. Okay, yeah, so this illustration right here tells you click on A, drag to B, and measure point C, which is at 61.8%. Okay, confluence of Fibonacci and support and resistance. So let's say Fibonacci, how to use Fibonacci with support and resistance. So let's say price broke below the support. Okay, so you take from the point that price started to break from, and then you take the price to the end of the impulsive move, so that's A to B, and you measure the retracement, the pullback back, like the corrective move, the retest back, and it should be at the 50th percent or the 61.8% or the 78%. Okay, yeah, so that's Fibonacci and support stroke resistance confluence. Okay, so we have another thing, the resistance plus moving average confluence. So let's say price has been bouncing off the 50 moving average, and we have the alignment of the moving average, like from the smallest to the largest, they are aligned well. Okay, so let's say price bounced off a moving average, so we mark it as point A, and to its extension point B, and its pullback C. For the retracement level, we measure it and we found it to be at either 0.50%, 61.8%, or 70%. 78%. And that's why we take our entry after confirming the candlestick pattern over there, and after its break on the downwards or upwards as per the setup, we take our entries from there as it has already confirmed. And as always, we want to trade conservatively, so wait for the pullback. So the Fibonacci tool is very important. We'll be using it to measure the conservative entry, which is the pullback. Okay, with that said, I'll do another video to show you this in the real market chart. Yeah, with that said, see you in the next video. Bye. So guys, we are here at my TradingView charting platform. So we are going to look at Fibonacci retracement confluence with the moving average. So as you know me, I like using the 21 moving average. Okay, yeah, applied to median price. Okay, so this is how I use it. This is how I use the confluence of Fibonacci retracement with the moving average. Okay, yeah, you can see right over here. Let me take my path tool. So I'm going to measure from this point, this low that caused the break above this moving average. So that's point A to point B. Then I want to measure this point C, and then the continuation of the impulsive move. So I will take my Fibonacci tool over here. So this is an uptrend. I'll click on A, drag to B, and I get to know that this point is at my Fibonacci level. Around my Fibonacci retracement, I want it to be between 50% retracement and 0.78%, 78% retracement. So that's where the retracement is. So at these retracement levels, when I see a candlestick pattern, and then like on this point you have a tweezer bottom, okay, and price breaks above that tweezer bottom, so I want to be trading from that point. So I'll place my entry from here, right over here, and target higher prices. I'm going to show you right over here and now how I'll be using my stop loss just below that candlestick pattern. Okay, so I want to be trading higher from here. So this is the real market chart of how I use the moving average and the Fibonacci confluence. Okay, so let me go to another example. I show you how I estimate my entry using the Fibonacci retracement. Okay, yeah. Okay, so I have your card over here. I just drew my support and resistance trend lines for me in a channel, rising channel, and I see that price broke below the channel right at this point. Okay, so I want to estimate my entry, which is the pullback to the 50% level, to the or the 61% or the 78% of the Fibonacci retracement tool. Okay, so I want to estimate my entry point. So this is how I do it. I take my path tool and measure this point. So price came from this point. This is the high that now caused this low. So this is point A to point B. So I want to estimate my point C. Okay, then I continue downwards. So I place myself from the 50% or 61% or 78%. So I'll take my Fibonacci tool and click on A, drag to point B, and using a rectangle tool, I'll outline the 50% level to the 78% level. So around there, if I see a candlestick pattern, then it confirms, it forms a trigger, that is, the candlestick pattern breaks below the low of the candlestick pattern. If price breaks below the low of the candlestick pattern, it will have confirmed an entry sell. So my entry for this trade will be somewhere around here, and then I take my trade down, my stop loss just above the candlestick that will be formed at that point, and that's how I will have estimated my entry point using the Fibonacci retracement tool. So now I want to show you how to estimate your take profit using your Fibonacci tool. So we are going to be using Fibonacci extension. Okay, so I only use one point for my take profit, which is Fibonacci extension level 1.61 or 161%. Okay, so this is how I do it. So I already found my entry range, which is at that point. I've marked it with the rectangle tool. So the next thing is to find the take profit. Okay, so I'll delete this retracement, Fibonacci retracement tool. Okay, and take it again for my take profit estimation. I'll click on B now and extend it to A. So this point over here, the 1.61 or 161%, this is an extension level, and that's where my take profit will be. Okay, so that's how I use Fibonacci extension to estimate my take profit. Let me take you back to the previous example of the moving average plus Fibonacci retracement. We use now Fibonacci extension to estimate its take profit. Stay with me. Okay, so we are over here for the moving average plus Fibonacci retracement confluence. Now I want to use Fibonacci extension to estimate our take profit. So I'll just delete the Fibonacci retracement. Now I take the Fibonacci tool again, I point it at B and drag it to A, and then I'll have found that my take profit is right over this point at the Fibonacci extension level 1.61 or 161%. So my take profit will be at 1.2229. 1.2229, that's where my take profit will be, and my stop loss over there. And by doing that, I'll have gotten a good risk reward ratio of 1 is to almost 3. Yeah, so using Fibonacci retracement and extension tool is very meaningful because you'll get good risk reward ratios, and the entry points will be perfect. Like your trade, if you take your trade, it won't stay in red so long, and it will definitely hit take profit. So I'll watch these trades and see how they'll play out when the market opens on Monday. So right now we are on Sunday. Yeah, so I know they will take profit. So that's it, guys, for the Fibonacci extension and retracement illustration. I'll see you in the next class. We'll be talking about the forex rules that govern me to be profitable consistently. Bye.